Oh God, I've not been recording this call. Okay, those of you who are online who are in the meeting, I believe you're not missing anything. It's those of us that are not available for one reason or the other. Okay, so as I was saying, if Mr. Kolawole has Bitcoin, maybe a Bitcoin, 2 Bitcoin, 3 Bitcoin, but then after my analysis, I believe that Bitcoin will drop in price. I could take his Bitcoin from him, sell it at the current market price, right? Because I believe that when Bitcoin drops, I could be able to buy it and take the spread between my entry and my exit. Say, for instance, I sold the one BTC at 40,000 and then BTC drops 35,000. I bought back the BTC at $35,000. I'm making about $5,000, right? That is what futures trading is all about. So when you short markets in the futures, it means that it's just like Binance is loaning you that assets you are buying. For those of you that trade cryptos, if you are shorting a currency now, your broker is loaning you that asset and you sold it. So after selling the asset, the particular asset, you are meant to, when you're exiting that trade, you are want to buy it back. So you are only going to make money if you buy back at a cheaper price. That is why when your stop loss hits at a higher price, you lose money because you are buying back what you sold at a lower price at a higher price. I don't know if it's making sense. Is it making sense? If it's making sense, drop a 1 in the chat box. If you're making sense, drop a 1 in the chat box, fam. If it's making sense, fam, drop a 1 in the chat box. Drop a 1 in the chat box. Okay. So that's what futures trading is all about. So you are only gonna make money when the market is below your entry. Sorry, if you are shorting, or above your entry if you are long. Okay. Now most exchanges like Binance now have what we call perpetual futures because primarily, let me load my Binance app so I'll show you guys something. Permit me to load my Binance app. Man, permit me to load my Binance app. So now in the Binance app, we have what we call the primary futures contract. These primary futures contracts are those that are delivered quarterly, annually, or per se. But then they are not delivered daily, not like the ones most of us see that we call the perpetual futures contract. Perpetual futures contract on the Binance, till you cancel it or till you lose the position, you are still in the trade. Okay. So I just want to show you types of futures that you can have, perpetual futures and the rest of them. Network is poor. This is loading. So I would like it to be very clear to each of us. Okay. What's happening? Excuse me. Please pardon me. I just want to show you something. Okay, it's coming up now. So the primary futures contract that we know before, because exchanges and brokers, they are developing products. So primary futures contract is usually quarterly, annually. They are delivered at a certain date. So I'll still show you, excuse me, for the currency. This should load fast, please. Oh God, my network is poor. What's happening? Yeah, it's coming up. Pardon me, pardon me. The network is just bad. I use wired network now. I don't like this. I don't like this. Let me load what's it called? Barcharts.com so you can see the currency feature. I don't know if it's Binance that is default or myself. My network. Let me load. Okay, yeah, here. We are here now. Okay. This is a perpetual. This is a perpetual contract. That means as perpetual, it means it's continuous. If you are trading perpetual futures, it's continuous. Now, delivery. This is the normal. Okay, you can't see my screen. Perhaps it's the Binance app that is causing this. Let me check if my screen is still being shared. Video is post. So my screen is on. I think it's the Binance app that is causing this. Okay. I think it's the Binance app. It's not sharing the screen. Can you see my screen now? Okay, let me leave and join you guys. Let me leave and join you. So you can see my screen now, right? So we want to check for. So let's see. So the primary futures markets, whether commodity, they can be traded in the futures, whether currencies, they can be traded in the futures. So they are delivered at now you can see stocks, ETFs, exchange traded funds, options, futures, currencies, news, that one, the rest of the other things I've explained it today. So when you see these things, whatever you see this, they won't be foreign to you anymore. You understand? So let's see futures. Cash markets. Okay, now I explained to us commodities, wheat, soybean, corn. These are commodity in there, but are traded in the futures market. Now, commodity is a market. I told you all that, right? Now, forms in which these commodity markets could be traded, they are traded either in futures, commodity groupings. We talked about this stuff. So they won't be foreign to you anymore, right? So let's see. Euro futures, long-term trends, the futures market. Let's see metals, currencies. Okay, currencies, futures. So now look at what you're seeing here now. Can you see my screen? They say DHX 2022 US dollar currency index to be delivered. All these things you are seeing here is the delivery date. So it's a futures contract that will be delivered by March 32. So now what this means is that some people are long on this market, some people are short. But by March 2022, at the expiration date, the transaction will be balanced. If you were long, and the market went in your direction in the long bias, you will be negative. You'll be positive rather. If you are short and the market went against you in the positive direction, you will lose money. So that's what this means. So these people may not be losing money. They may be losing money, but the money will not leave their accounts now till the expiration date, which is when? March 2022. So now this is June 2022 contract. This is February 2022 for Bitcoin futures, and this is what futures market is. But for that one, we trade in the Binance app, which is perpetual. You open a position, and then the market hits your target to take your money. That's what we call perpetual futures. It's a continuous. The same with currency markets. When you trade currencies or futures with your broker, it's what a continuous time enforced. Good till cancelled or you hit your stop loss. That's what we call those type of orders. Okay, that's basically what the futures market is. I don't know if you have any question on the futures market. Do you have any question on the futures market? If you have your question, drop in the chat box. If you are good to go, reply with 1 in the chat box. If it's clear, reply with 1 in the chat box. If it's clear, reply with 1 in the chat box. So go. Okay, it's clear. So let's go. Let's go, fam. Let's go. Okay. So point number 3, I want to discuss exchange traded funds. Exchange traded fund. Exchange traded fund. Number 3. Exchange traded funds. Traded funds ETF / mutual funds. So when you hear they want to bring out Bitcoin ETF, or they want to bring out Bitcoin mutual fund, that Fidelity is trying to launch this, SEC rejected this. Some of us may be wondering, how important would this be? How can this impact the market? So if you understand all these things, basically you will know how one will impact the market. That's when you start going, and then you start doing what we call intermarket analysis. Okay? So basically, let's see the exchange traded funds / mutual fund. Exchange traded funds. These primarily could be indexes. And indices that are traded at the various exchanges or brokers. For instance, now, when we talk about DeFi, we already have what we call DeFi index on Binance. When we talk about DeFi is an ecosystem, you can have an index that tracks the performance of all DeFi assets. And then if you design a product on this index, you could trade this on Binance as an exchange traded fund. But then each broker or each exchange has its own exchange traded fund. But primarily exchange traded funds, because sorry, my screen is not shared. This is what I was sharing. Okay. Sorry. How do I change my sharing option? Let me leave Andrew so I could. Sorry, I had to leave so I could share the screen where I am now. Okay, the note page. Thank you, Mr. Kolawole, for calling my attention. So you can see my screen now, right? So we have the exchange traded funds. So these funds can be designed by the various exchanges to suit them. So that's why if you want to trade exchange traded funds, but the biggest exchange where you can trade exchange traded fund is Chicago Mercantile Exchange or Chicago Board of Trust. Okay, that's the biggest exchange where you can trade ETFs. You have various ETF that tracks real estate, ETF that tracks the banking sector. You can have exchange traded fund on any markets, on any commodity or any asset. Just know that the exchange traded fund tracks an underlying asset. But unlike the spot markets, when you buy an ETF, you are not buying the particular asset. Say for instance, now you go to the real estate firm, or you feel like you like investing in real estate, but then you feel it's risky buying a particular house in an area where you feel that they may rob this place, or security or civil unrest and the rest of them. But then you know that there's a real estate that can risk it. that is providing an ETF mutual fund on that particular area, but you want to risk it. So you can just give them your money, they do the business. You are not buying the house because you are buying a trust, a fund. You're not buying the house. So when at the end of the day, if transaction is positive, you will make interest on your capital. But then if it's negative, just like the whole the market is, you will lose money. So it's not just, you're not buying a house, you are buying, if there are 50 houses there and there's an area estate operating on those 50 houses, you are buying an average in the various 50 houses. This house may not be rented out, this one may be completely occupied, but because it's a basket and average of that attracts the general performance, it may not be negatively impacted. Say for instance now, if there is an index tracking, so nobody called my attention here, but we know that this is options. Okay, so if there is an index that tracks the performance of the cryptocurrency market, generally, you know that the whole cryptocurrency market could be selling, but one can still be buying, pumping. Are you aware? Yes, if you are aware, type from 2 in the chat box for me. So the whole market could be going on a downtrend while a particular asset could be buying. And because of that, that's where the average will play a key role for you. When you are buying an average, your risk is mitigated. So all those things, these forms of trading helps you what? Reduce your risk, diversify, and then saves you from the emotional roller coaster that is attached to owning an asset. Because if you have a house that you bought for $50,000 this year, and then next year the area is worth $20,000, will you be happy? And then if you are into business, will you be happy? But then if you bought an exchange traded fund from a real estate industry or a real estate firm, now that real estate could be operating in Lagos, could be operating in Abuja, could be operating in Enugu, could be operating in Ghana. You understand? For the fact that they're operating in various places and then you are buying an average of the resource they have. You understand? That's what exchange traded funds are. But the difference between the exchange traded fund and the mutual fund is that the exchange traded fund is traded daily at the open of the market, while the mutual fund is traded at the end of the market. So if you want to understand this more, you may want to read them up. But I don't think any of us will trade any of this. But then on the Binance, like Mr. Awa asks, are those Binance leverage tokens? Yes, there are Binance leverage tokens on the Binance. Each exchange can design its own products. Exchange traded fund. That's why it's called exchange traded fund. Fund on that exchange, they can maybe bring out a product that tracks the performance of Bitcoin, a product that tracks the performance of US currency index, that tracks the performance of US government treasury bills or treasury notes, that tracks the performance of the Nigerian government bond. But then you are not buying that bond. You are not buying the Bitcoin. You are not buying a product that tracks that performance. And then if it becomes an average, beautiful. I don't know if I've made sense. I don't know if I've communicated this exchange traded fund. Please, if it's clear, types on 1. If it's not clear, types on 3 in the chat box, please. If it's clear, types on 1. Not clear, types on 3 in the chat box. So proceed. Go to the options. Then I'll give us example. Clear, types on 1. Not clear, types on 3. Okay, it's not clear. Okay, thank you so much, Bishmega. If you do not type, I will assume it's clear. Only Bishmega is saying it's not clear. Okay. Now, exchange traded funds. Excuse me, Mr. Bishmega, I will unmute you so you talk to me. Mr. Kola will say 3. So Kola, take it easy now. Bishmega, where are you? I will unmute you now. So you talk to me. Okay. Wow. Not clear. Okay. Mr. Bishmega. I don't know if you're a Mr., but sorry I call you Mr. I've unmuted you, Mr. Bishmega or Bishmega. I don't know if you're a male or a female. Sorry, sir. Please, pardon.
I'm male.
So please.
I'm sorry I'm dragging everybody back. Actually, pardon me, let me speak pigeon. I go church. I go church. So I know come the concentrate when this particular thing was going. You understand? I don't know. Maybe if you're explaining to others that do not understand, maybe I will now pick from there too.
Okay.
Or
So,
something like
Mr.
that.
Bishop,
Yes.
which market have you played before? Have you traded any market before?
I was on sports. I've been there just
Sports.
I was buying just sports market, and then presently have some this thing that I bought I think at ATH, all of them. And now you see what every altcoin is doing. They are dancing to the tune
Okay,
of
now.
yeah.
Okay, sir. So that's basically you're talking about cryptocurrency market, right? You've been
I'm hearing big now come and
yes,
yes, yes.
cryptocurrency. So let's discuss that. Okay, thank you.
Okay, sir. Okay, sir.
Let's use that environment to discuss. So let's see if you can understand better. Okay. So I will unmute you now. So Favor Ma, please I will unmute you now. Ma, which market have you played before? Have you played any market before?
Sir, but not as an expert.
Have you traded any market before? Whether expert, pro, novice, newbie, have you traded any market before?
Yes, sir.
Which markets, ma?
Sport.
Sports.
Sport.
That's cryptocurrency, right?
Yes.
Okay.
Yes.
Anybody else that want to say anything that is contrary to cryptocurrency markets? Can you raise your hand up? Okay. So I will use this cryptocurrency market. It seems all of us we are versed with crypto market. Okay. So now exchange traded fund. Now we know what Bitcoin is. If you want to speculate on Bitcoin, you could buy Bitcoin on the spot markets. You are owning the Bitcoin, right? Now, what if I tell you now that there is a particular product that tracks the performance of Bitcoin? And the advantage is this: one, you don't need to have $50,000 to buy Bitcoin. Now, for instance, now you feel that Bitcoin will go up, but you know that you don't have the $50,000 because if to trade Bitcoin, you need to have big money. You understand? You need to have big money so you make good money from Bitcoin. But if you don't have big money, you don't need to play with Bitcoin. You just be making sense, change. So now there's a product that tracks the performance of Bitcoin that just works, or I would say mimics Bitcoin. And when you buy that particular product, you believe that Bitcoin will go up. But then the difference between this product and Bitcoin itself is that if you buy the Bitcoin, you are owning the Bitcoin. It's in your custody. Do whatever you wish. But this product is a contract between you and the person who is offering you this product. Okay? So now the advantages are: one, it's cheaper than Bitcoin. Two, you may lose your money if the market reach a pre-agreed price. If you are long, if it reaches your stop loss, you'll be liquidated or you'll be taken out of the market. If you are short, if it hits your stop loss, you'll be liquidated. Or it goes beyond your maintenance margin, you'll be taken out of the market. Okay? So this asset, which is the exchange traded fund, now is leveraged. It's leveraged. Why? Because when you leverage it, it's giving you the asset that you can own a larger quantity with little money. That's what's leverage. Let me chip in this now. For those of us that have been trading future or have been playing with futures market. Now, leverage does not help you to increase your profits. Don't make that mistake or the assumption. When you see somebody using 50x and then he makes 200 and something percent, that doesn't mean he's making 200% of his money or whatever. Leverage only helps you to limit or minimize the money you are spending on a particular contract. If you are going to buy one Bitcoin and you are using a 125x, it means the money you have will be multiplied for you 125 times. Say, for instance, I have $1,000. It means my $1,000 will become more than $25,000. That is what using 125x to do. But then if I still have that $125,000 and then I buy one Bitcoin with it, the same money you make me using 1x, it's the same thing I will make. But then my risk will be little because the higher the leverage you use in trading, the higher your risk. Okay, but then they works with different platforms because I know some platforms already or some people who have crazy exchanges like 1 to 5,000, 1 to 1,000. But then you need to study this a bit, understand the way it works by demo trading, and then understand how the platform will work, because I will introduce you guys to all those things we are talking about. If you want to trade the market, we'll not just talk about it theoretically. You will see us doing it practically in the nearby future. But then, like I said, this is a community we want to grow. We need only committed people, disciplined people. We don't want a populated community. Whoever is coming in to be with us should be someone who is disciplined and willing to work, okay? So let's grow each other. We can continue learning from each other. So the exchange traded fund, the exchange brings, sorry that I digressed, they design this product to mimic a particular underlying asset. For example, Bitcoin. When you buy this, you believe that Bitcoin will go up. And then, but you are not risking so much. You are risking only your money because you are not owning that Bitcoin. Okay? And then if Bitcoin comes to a particular place, you can redeem your contract and you make money. That's just like futures. All these things are just like futures, because all of them, aside the spot market, the rest of them are derivative market. We talked about it already. They have the same directional bias that you can help you go long or short. But the only difference is the contract. Whereby in the futures is delivered at a particular date. Exchange traded fund. Now the difference are one in the assets traded, two the contract. Exchange traded fund, you can trade mostly indices. Something like NAS 100 in the currency markets, US 30 that track the performance of the US utility averages. The NAS 100 that tracks the performance of US stocks, that is the tech stock, the likes of Google, Tesla, and the rest of them. US 30 tracks General Motors, US Steel, General Electric, and the rest of them. Then you have the UK 100. UK tracks performance of stocks in UK. You have the German 30 that tracks the performance of Germany. All these things are exchange traded from their indices or index. Okay, so when you trade this up, because each exchange, that's why it's called exchange traded fund. What you see in this exchange is not what you see in this exchange or broker. Okay, so each exchange or broker will design its own product, but the way it will work is that you are buying this, you are risking a little money to buy this. But because the market is very volatile, that you don't want to own a spot market, you don't want to play in the spot market, you buy that particular ETF and you are mitigating your risk. That's just what ETF is about. Okay, I don't know if it's still not clear. If it's still not clear, that means I'll still go on a walk again, then make a special video for this. Is it still clear? If it's not clear, reply me with 3. If it's clear, reply me with 1. So we'll go to options. Still not clear. A stays still not clear. Okay. Sorry. My bad is not clear, but I'll do my possible best to make it clear. So I'll make a video probably before the end of the day. Wow. Still not clear. Seems you will need to interact with this. Although I don't trade ETF. I don't trade ETF, but I will try to study it more. And because most of these other market, likes of sports and futures, currency, I play them so I can actually explain from practical knowledge. But I'll try my possible best to study this more, okay? And then explain to us. Maybe a special meeting will be held for that. So I'll just make a video. And where does margin market belong? Margin market belongs, these are derivatives too, okay? Margin is still derivative market. What margin only does is this. Is it possible for ETF assets to hit zero profits? Zero profits. Is it zero profit that you said? Yes, you can lose money in ETF markets. You can lose money in ETF market. Okay? So margin market belongs to derivative markets. No, zero price level. No, it's not possible. No asset can reach zero. If it reaches zero price level, that means that particular what's it called? That particular asset must, because it mimics the real world price. Okay, it mimics the real world movement, and a stock or a particular financial instrument cannot click zero, cannot go negative. Before it does that, if there's a potential to do that, it will be delisted or it will be closed. Trading will be closed on that. Okay. I don't know if it's clear, Mr. Awa. So, Mr. Pharmacarus, you asked, where does margin market belong? Margin market belongs to the derivative market. What margin is all about is that your leverage, you are actually trying to trade in the spot market. For Binance margin, You are trying to trade in the spot market, but then when you use the margin, you are leveraged. Say for instance now, you have $1,000, okay, and then you want to play in the Binance margin. If you go to the Binance margin, and the Binance margin may have the likes of 3 times, 4 times, depending on the assets. It means that your what's it called? Your assets could be multiplied. You could be given a margin, money. You are borrowing money, just like the same way you do in the features, the Binance features. You through leverage, you can play. Through leverage, your capital will be increased. But then in the Binance margin, the major difference then in the Binance margin is that, excuse me, please. Sorry, fam, I had to attend to family. Okay, sorry. So, Mr. Famekos, I was trying to explain Binance margin to you. So let me just tell you how the Binance margin works. Binance margin works because in the Binance margin, you are borrowing money. That's what we call margin trading. You are borrowing money from Binance to trade. So, but then you need to have some money as a collateral. Okay, you need to have some money as a collateral. So maybe you deposited $100, and then you borrow based on the leverage. You can borrow maybe 5 times of your money. And then you borrow money. You buy that asset there in Binance margin. If you buy, it could be a buyer, it could be a seller. If you buy in the Binance margin, you believe the asset will appreciate, and then because the money you borrowed will now give you a bigger capital to trade. So when you buy, and then maybe say for instance you had $100 and then you borrowed $500 extra, that would be $600, and BNB is at $300. You now bought 2 BNB at $300 average price. So BNB moves from $300 to $320. You sell your BNB. You are making a difference of what? $40 on your Binance margin trade. But that Binance margin trade you are trading, you see that BNB will appear in your purse, in your wallet, just like spot trading. The BNB will come into your wallet just like spot trading. Okay? So that's just the basic. But then in the futures market, you cannot have the BNB. You are just having the money placed there, and then the contract, the market is going. If it goes in your favor, you are making money. If it goes against you, are losing money. But then and again, the Binance margin, if you have a big account, you can maintain your margin. If you have the money, you can hold the trade for a long period of time, just like futures too. You can hold the trade, just like that's why I say all these things are derivative. They have the same. If you understand the derivative markets, the underlying derivative markets, you understand easily what these things are trying to do. Okay. So now the Binance margin will help. You can hold that particular asset, or you borrow the money to trade, but you can hold it for a very long period of time. If it goes your direction, you are making money. Now again, the Binance margin you can still short. Now, how do you short in the Binance margin? You borrow extra money. When you borrow extra money, say for instance you are borrowing on BTC. Now you borrow money and then you short BTC in the Binance margin. So it means that you've borrowed BTC from Binance and you sold it at that particular price. What you will do, you will buy BTC back and then you make your money. Take the difference. When you exit the Binance margin trade that you shorted, you take the difference and then you pay Binance back her money. So because for instance, now Mr. Famokarios, you have an iPhone 8, or I must say you have an iPhone. What's the latest iPhone? I think iPhone 14 is out. You have an iPhone 14 now. I come to you because I know a market, or after I've done my research and my analysis, I believe iPhone will go down. I now borrow your iPhone, and the worth of iPhone today, or at the for whatever reason, but I know that iPhone should go down. I borrow your iPhone, I sell it at the current market price, and then iPhone drops. I could just borrow your iPhone, go to somewhere, deposit the iPhone, and then they'll give me extra 5 iPhone. Then I'll go and sell it. But I sell the extra 5 iPhone, and after selling the extra 5 iPhones, I now go somewhere again, or in the same environment, something happens, maybe pandemic, whatever. But then the price of the iPhone, the market price of iPhone drops. I will close the trade. That is, I will buy your iPhone back. I'll buy those 5 iPhone back rather. Then return to that, what's it called? The marketer or the exchange where I borrowed the 5 iPhone, because I already dropped your iPhone as a collateral. Then I give them back their 5 iPhone, and then I'll pay a service charge for the transaction. And I'll take the 5 iPhone, and I'll not take your own iPhone. What money am I making? The one I made is because at the price I sold you the iPhone I got with your iPhone as a collateral, those 5 iPhone, the price I sold them is way bigger than the price I bought the other iPhone. But I wouldn't have been able to do this if I didn't deposit your iPhone as a collateral. So I need to deposit your iPhone as a collateral, and then I'll borrow extra 5 iPhones. Okay, so that's basically what margin trading is. I don't know if it's clear, Mr. Macarius. If it's clear, drop someone in the chat box. If it's not clear, let me know. Drop trade in the chat box. Is it clear, Mr. Macarius? Is it clear? So proceed to options market. Is it clear? Margin trading. If it's clear, drop someone in the chat box. If it's not clear, drop some trade in the chat box. Hello, Mr. Macarius, are you with us? Is it clear? Drop someone in the chat box. Okay, clear. Thank you so much. So let's go. Let's look at options trading. Options. So before now, we say that all those things could be classified as the derivative market 2, 3, 4, which is the futures. Why are they called derivative market? Because you are not owning the underlying assets. They're just trading a contract. You understand? That's why they are generally called derivative markets. You're not owning the asset. You're just trading an underlying contract between you and either the exchange or the broker. So options. This is the interesting one. Options. Remember what we are talking about? Forms of trading the financial market. You could trade any financial asset at the spot, in the futures market, as an exchange traded fund or an option. Given the fact that these forms are available, not all products will be available in the spot markets. Not all products will be available in the futures market. Not all products will be available as an exchange traded fund, and not all products will be available as what? Options. Okay? I believe this should be clear. So now let's talk about options. An option is a contract that gives a buyer the rights but not the obligation to buy or sell an underlying asset at a predetermined futures price. Remember, I said all these things are what? The derivative, but then the way and the manner in which they are delivered is what differentiates each other. Futures market, primarily, you buy it and then it will be delivered at a certain period of time in the future. You are buying a contract. You are playing with the underlying. Now, exchange traded fund is another fund, is another asset that may mix a real world market. It tracks the performance of a real world market, or it says it mix a real world market. So when you play with the exchange traded fund, it could be an index. It may make a particular asset, a group of assets, a collection of assets as an index, and the rest of them. But when you play with these guys, the same way the derivative market is a contract and they will be delivered at a future price, the same way all these things are delivered or settled at a future price. Only difference is the asset traded or the contract. I don't know if it's clear to you. So now in the options market, a buyer buys an option, gives the buyer the right but not the obligation to settle or buy an option at an expiry date. I don't mean that my Binance screen is sharing. I could have showed you guys what the options market looks like. Now, if you go to Binance Futures, you will see USDM. If you are using Binance, you see USDM, you see CoinM, you see options, and then you see Battle. So the options you are seeing there is what we are talking about now. So this option is a market. or a put order gives the buyer the right but not the obligation to settle. That is why it's called options, to settle at a predetermined price in the future. Say for instance, if you buy an option, we have what we call call option and the put option. You buy a call option, you are buying a contract that the assets you are buying will appreciate in the future. That is, you're a buyer, you're a net buyer, you are bullish on the assets. Okay? Now you buy a put option. The put option is an option that says that the market will be bearish in the future. So now, as an investor, if you want to play with Binance, you can either buy the call or the put option. But then we have those who write options. Those who write options are the ones who call liquidity providers. Okay? So this option now, if you are playing with an option, you are not buying the underlying asset again. You are not buying a contract that specifically says that, one, I bought BTC at 35,000. So if at the expiration date, which could be 5 minutes, 10 minutes, 10 days, 1 day, 2 days, depending on the contract, please, if you can open your Binance app and then you are looking at options page there, you could just do something like they ask you quiz question, you just say no. They will still open the page for you. See 5 minutes, 10 minutes, 1 day, and the duration of time an option could expire. So you set the duration of time you want this contract to expire. And then if you buy call option, then you mean that you're expecting Bitcoin to appreciate. If you buy put option, you're expecting Bitcoin to depreciate. So now, at that expiration time, if the price of the asset is above your entry price, which we call strike price in the option market, you will make money. Then if your the market price at the expiration of your option is below the strike price, you will lose money for a call option. Then for a put option, if the market price is above the strike price, you will lose money. That's what an option is. The derivative market generally are what's underlying contract that makes the real world market. It's a market where we trade underlying contracts or assets that mimic the real world market. And these assets could be the futures, the exchange traded fund, or the options. So an options market that we're discussing now is a market that gives the buyer or the investor the right but not the obligation to buy a particular asset and an expiry date. So the contract be settled at what? An expiry date, just like these other assets at an expiry date. But then the difference now is that at that expiry date, you will be looking at your entry price and your exit price. So if it's net positive, if you are long, that's you bought a call option. If you are long, that's you bought a call option. Just let me use futures term. If you bought, that's you are long on the call options, you are buying call options. If you are short, you are doing what? You are buying put options. That's basically what the options market is. But then now, in the options, you can use more money and buy a contract. Those options are traded in shares, in kind of when you are buying share units, I think in units of 100. So you deposit your little money, which we call premium, and you trade an asset. So you only lose your premium. You only lose your premium. So for instance, you deposited $10. Not like this one you set stop loss in the futures. Deposit $10 to buy a certain number of shares, maybe 100 shares of Bitcoin. You are just using your small money. If it can buy one Bitcoin, it will buy one Bitcoin for you. So it means that from your entry price with your $10 and Bitcoin gets to 35,000, because you bought one Bitcoin there, and Bitcoin goes from that particular price, 5,000, and goes to 35,500, you will be making $500 on your options. But if your premium is able to buy one Bitcoin, you'll be making the difference between your entry price and your exit price. That's how you make money on options. Sometimes different between your entry price depending on the contract. So you just need to study the exchanges option or your market providers option. Some of them are actually the more you bought, divided by 100, multiplied by a price, some calculation that did. But basically, what it does is that at the settlement date or the expiration of your options, you will be taking the difference between your entry, which is the strike price, and the market price at the settlement date. If it's positive, you make money. If it is negative, you will lose the money you bet or you stick on that particular asset. I don't know if it's clear. If it's clear, reply with 1. If it's not clear, 3. If we are clear, reply with 1. If it's not clear, reply with 3. Options is clear, reply with 1. If it's not clear, reply with 3. Awa is saying 1. Okay, it's clear. Anybody else? Anybody else? Carlos is saying 1. Okay. Takola Wale 1. Beautiful. So the problem we are having is exchange traded fund. So I will still look into this guy. I could make us, yeah, the same as binary. Yeah, trading binary, same as binary. Where you could buy number of ticks, right? Mr. Pharmacarius, buy number of ticks, you specify number of ticks that will be correct. If it goes in your direction, you are making money. If the number of ticks, say 1, 2, 3, 4, 5 ticks goes against you, you are losing money. Exactly. That's what option is. That binary operates as an option. So we've been able to explore the forms in which the market could be traded. So you now see that you can choose to either be a spot buyer, and what are you risking as a spot trader? You are risking, as a spot trader, you are risking just the psychological stability of holding the asset. If the asset loses value, you are losing the money because the asset has lost value. You are not losing money till you sell. But then these other derivatives, you are only staking your money. You are not owning the underlying asset. So because before you enter this, that's why we're talking about risk management. Before you enter any of this, you must have done your due diligence, your risk management, your analysis, and all those stuff. So you know that the money you are betting on this, or you are staking on this particular asset or market or trade, you manage your risk properly, okay? So we'll talk about that when we get to risk management in the future. So if you have any questions, kindly raise your hand so I unmute you. You ask a question. Your question could be from what we did today and what we did yesterday. If you have a question, please call my attention by raising your hand. No question, no question. Okay, let me unmute every one of you. Let me unmute every one of you. Okay. She said, well, you're asking a question. Let me come in. She says, what's the question? In option, do you lose your money whether or not you sell? Now, in option, you are a buyer or a seller depending on the type of option we are buying. So in the option market, you have what we call the put option and the call option. So if you buy the call option, it means you believe the market will go up. Okay? Now, if you buy the put option, you believe the market should go down. You're going to lose the money you stake. If you buy the call option and the market go down, you will lose the money. At the time of expiration, because options will always have an expiry date. There, some of them will say 5 minutes, some of them say 10 minutes. Like different people will call this in different things. Some people will call it in the currency market high frequency trading, HFX. Okay? Then as we go, we'll still be exposed to all this stuff. So in the option market, Mrs. Pebble, you just buy the option. If you believe it will go up, you buy a call option. You are bullish when you buy a call option. You are bearish when you buy a put option. But as an investor in option, you are always buying. Okay? You are always buying. But then you either buy call option if you are bullish, or you buy what? Put option if you are bearish. But whatever position you take, you are buying. Okay? I don't know if it's clear, man. Thank you so much. Any other question? Another question. So let me look at our timetable and see what we'll have for tomorrow. So the problem we have now is the ETF, Exchange Traded Fund. Okay, I'll try as much as possible to make a video on that or still study more on that. Okay, but I don't trade that. I think that is why we're having that challenge. I don't trade that. I don't trade that asset. Let me see our timetable for tomorrow. Okay, so tomorrow what do we have? We have, I think, trading view, understanding trading view. What do we have? Tomorrow is thought brokers, exchanges, how to choose a broker. Okay, so we'll discuss about brokers or exchanges. The likes of in the currency market, we'll talk about brokers. The cryptocurrency market, we'll talk about exchanges. So when we talk about exchanges, we're talking about things like centralized and decentralized exchanges. When you call centralized sex, talking about Binance, FTX, Coinbase, KuCoin, and the rest of them. When you talk about decentralized, talking about Uniswap, PancakeSwap, Dodo, Bakery Swap, and the rest of them. So we want to look at all these things, and then we'll see the upside and the downside of using these various exchanges. Which should I use? Should I use this or should I use that? Okay, that's basically what we want to see. Personally, we may be able to look at how to use centralized exchanges, the likes of Trust Wallet, to swap through PancakeSwap or Uniswap, or how to connect our wallet to. So we may look at all those stuff. Then the next tomorrow, should I even? Okay, we'll talk about the TradingView website and how to use the TradingView. Most of us don't know this. So why you want to talk about that is because when we start our market analysis, like you see me, I'm writing on my TradingView. Out there, I'm writing. We'll have tools that I will use in our analysis to draw trend lines, to do the rest, which is almost people want to know, but they don't want to know the basics. But when you know all those things, it will help you a long way. You know what's happening in this market, and you could use it to say this may happen in this other market too. Okay, so that's that for this. You understand the TradingView website, and then on the 5th, we'll be talking about market campaign or analysis, how to do your fundamental analysis, how to do your technical analysis, what fundamental analysis is actually about, what technical analysis is actually about. So why should you be a fundamental analyst or should you be a technical analyst? Which is better, whether fundamental analysis or technical analysis? We will see which is better. So you, at the end of the day, you'll be the one to decide which is better. But I don't know the one that is better either. I don't say this one is better either. Now, then we'll talk about support and resistance. What is actually is the myths of support and resistance. Then we'll talk about market structure and IOF. Okay, types of market structure, break of structure, what it means. We'll talk about ranges, and then the beautiful girl want to talk about Fibonacci retracement zones and what they mean. This is actually a very important tool for the price action trader, the naked chart trader. Fibonacci zones. We want to talk about premium, discount, and then we'll talk about risk management. And on the third day, I will introduce you guys to harmonics. Man, can we do this harmonic in 2 hours? Okay, we'll talk about harmonics, and then on the 11th, to bring everything together. Okay, bring everything together. We could do live examples on tricking trades and the rest of them, or we use past trades to go over the process. And then while going over the process of the thought process of taking such trade, you see that everything you've been taught now will be brought together and then they'll be applied. Like I said, I'll give you the knowledge, you do it what you wish, okay? The knowledge, I'm not promising you're gonna be profitable, but probably you will see me using the knowledge that I've shared with you for the time being. And as time goes on, we may likely have other sessions or meetings in the near future. So that's basically that, fam. Thank you guys for your time. It's already 7:20. So if you don't have any questions, can we call it a day? From the past class, nothing that is related to what we just discussed about, types of markets, anything that has been ambiguous to you that you don't understand, you can ask them. Okay? For those of you that have been seeing X up, X down, I believe you know what these things are now. You are seeing Ethereum up, Ethereum down on Binance. Those are what we call ETFs. Those are ETF, exchange traded form. So you could go to options and you trade options. You know what options are now. You go to what's it called? Stock market. You play stock markets. You know what stocks are. When you want to buy UBA stock, now you know that what you trade interacting with is the UBA stock. Then The beautiful thing about what we're doing here is that we're not just talking about cryptocurrency, we're not just talking about forex market, we're not just talking about stock markets. We're talking about being a savvy investor. That's what it is. Knowing what you want to do in the markets. Have the knowledge so you could do whatever you want to do in the market at any point in time. Is it to interact with stock? You know how to do that, to interact with currency pairs, synthetic indices, and the rest of them. Okay? Do you know that I didn't talk about synthetic indices? Woo! I just remember that. But I will still chip that in. Okay, that's another market. The mixed real world example. I will still trade that in the future if we are still together. We still trade that. Okay? So that's basically that for this. So if you understood what we discussed this night, can I get someone in the chat box? Can I get someone in the chat box? If you did not understand, can I get some 3 in the chat box? If you still have an ambiguity but you don't know how to air it out and you would like to chat me up personally, can I get some 4? So let's go fam. Let's go fam. 1, okay. I was saying you understood everything, okay. I was saying you understood everything, okay. 1, okay. M and G, you said 1 and 4. Okay, ma, I'm a DM away. 14, 1 and 4. Bishmega, you say 14. I say 1 if you understood, 3 if you did not understand, 4 if you have anything you want to tell me personally. Or okay, thank you so much. I'm a DM away. I'm a DM away. Okay? I'm a DM away. The truth is, when at the complexity of things, I may not, like those of us that I started with, I know that as time goes on, I won't have this liberty or the time to interact with every one of us. And people that may be joining us in the future may not enjoy this liberty. That's the truth. Or this sincerity. Because one of the reasons why I may, let me just tell you the truth now. The idea is this. Mrs. Favor, you've been in one of my meetings before. You know that at the end of every meeting, I delete such group. I don't like Mr. Awa, you've been in my meeting before. You know that when I'm done with any meeting or presentation, I delete the groups. But I'm actually having a double mind because as we speak now, I'm actually honored by having the presence of my mentors. Yes, a lot of my mentors are actually here. So I don't know how I can do that. But if I'm able to convince them, that means at the end of the day, I will drop the videos for you guys and then we'll delete the community and then we'll part ways. Okay? So try as much as possible to make the best of it. Do as much as possible. Ask your questions. Anything that is ambiguous to you, I'm still available now. So, but let's just see as times unfold. Given the fact that we are together, if we are still together, we are together. Okay, we'll walk this walk together while I still can. Okay? So, thank you so much. If you still have someone you want to invite, if you are still together, an opportunity, don't feel bad. Opportunity will still come in the nearby future. Okay? You can add the person, you can share the link if we are still together. But currently, for this meeting, and which will not be repeated again, nobody's going to join us till we are done with that. So let's mean business and let's know what we are doing. You know the value of what you are, okay? I know the value of what I am. I know the value of what I'm dishing out. I mean, not to brag, but I know what I'm dishing out. So I don't beg people to attend. It's a choice. You can't beg people to learn. When you beg people to learn, they'll be doing guy. That's if I'm forcing you to learn. So I don't have to force you. So thank you so much for your time. It's already 7:25. If you don't have any question, you have any question, you want to meet me personally, I'm a DM away, okay? Like I said, I have you at heart. That's the beautiful truth. Some of us may not feel secured. I already shared my contacts. I already shared my name. Perhaps you want to do that because I'm someone that enjoys privacy a lot. I love privacy a lot. For those of them that have been with me, Mr. Famakalios, Mr. Kolawole, Mr. Awua, you guys know all these things. I enjoy privacy a lot, but you can actually add me up if you need. If you think there's a need for that. And just to tell you that you are actually welcome and you should feel at peace with me, please. So that's that. So in the absence of having a question for me, I think we can call it a day, right, fam? So for those of you that say you have something you want to share with me, please do call me up. Do call my attention, okay? So thank you guys so much for your time. Thank you so much for honoring me with your presence. and I say you are blessed. And at the end of the meeting, the videos, the recordings will be made available to you. Okay. Thank you so much, fam, and let's call it a day. Bye, M and G. Bye, bye, fam. M and G. Bye, fam. Bye, bye.